green tidal wave, the haters will continue to hate, but ultimately EV, I view it going into a golden age, 2022. You look at Tesla demand in China, that's the linchpin. Now, I think as that plays out in capacity build in Berlin as well as Austin, that's really the combo that I think sends us to 1400s, our base case, bull case is 1800s.
Dan, who is the biggest threat to Tesla's dominance? Is it Ford? Is it General Motors? Is it Volkswagen? Is it another name that we're not even talking about?
In this video, Dan Green Tidal Wave Ives discusses why he believes Tesla stock can increase 69% in 2022 to $1,800 per share in his bull case. Dan also shares some thoughts about Tesla's ramping production capacity and the so-called competition. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
If Tesla comes out here, beats strongly on earnings in the first quarter, I mean, theoretically, you could see a pretty big move, especially after Elon has been dumping shares and pressuring the stock.
Yeah, look, the haters will continue to hate, but ultimately EV, I view it going into a golden age, 2022. You look at Tesla demand in China, that's the linchpin. Now, I think as that plays out in capacity builds in Berlin as well as Austin, that's really the combo that I think sends us to 1400s, our base case, bull case is 1800s.
So Ives has a $1,400 base case for Tesla stock in 2022. That's where my bear case is at. My base case is close, but not quite at his bull case price target of $1,800 per share. And my bull case is significantly above $1,800. In fact, it's well over $2,000 per share. If you'd like to see exactly how much, hit the card in the corner or the link in the pinned comment to join Patreon. All members get access to my up-to-date price targets for 22 all the way out to 2031. The point I'm getting at here is I personally think that Ives, despite the fact that he's perceived as quite a bullish analyst when it comes to Tesla stock, is actually quite bearish and is underestimating not only what the company, but also the stock is going to do next year and beyond.
I'm just wondering what could go wrong.
Look, I think in terms of what can go wrong, I mean, a lot of it is really, look, competition's increasing across the board.
I vehemently disagree on this point. There is no competition. There's certainly other electric vehicles that are either in production or already available. But when you compare them apples to apples, price versus the performance, features, and functionality you get in that price range, there is nothing competing with Tesla today, nor will there be tomorrow, or in 3 or 5 or 10 years' time. It's certainly possible that a company can release a vehicle that has more range than a Tesla for 3 times the price. That's not competition. The same could be said of a vehicle with superior fit and finish for 2 times the price. Again, not competing with Tesla. If you're at the same price point as a Tesla vehicle, you will be delivering inferior specs, inferior performance, inferior range, inferior safety, inferior efficiency, on and on and on and on and on. And let's not even get started on how much it's costing companies to manufacture these vehicles, because no one is coming close to Tesla's profitability on vehicles sold to customers. And I suspect Dan is just doing his best not to sound like a biased Tesla fanboy, but there's nothing wrong with stating facts. Tesla currently has no competition, nor is there any threat of any credible competition around the corner or in the distant future.
So I think there's some worry there, but I don't view it as a zero-sum game. I view it as a $5 trillion green tidal wave. Ford, GM is going to be successful. I think could be re-ratings, Rivian as well, the Chinese players like NIO front and center. I think the biggest thing is really about China and about making sure that demand continues to accelerate.
This is another point on which I completely disagree with Dan Ives. There's no need to, quote, accelerate demand for electric vehicles. The demand is there. The question is about building them. If Tesla made 2 million electric vehicles in 2021, they would have sold the lot. If they made 3 million, they would have sold the lot. And by the time Tesla ramps to those kind of volumes, their costs will have fallen even more dramatically, meaning they're able to sell their vehicles even cheaper, which means there's even more demand. As I've mentioned in the past, a linear decrease in the price of an electric vehicle causes an exponential increase in demand. Tesla doesn't need to, quote, do anything to ensure that there's accelerating demand. They simply need to build more electric vehicles. And a consequence of doing so will also mean their production costs plummet, meaning if they need to, they can also decrease prices or just leave them as is and benefit from even higher profit margins or a combination thereof. aka winning, winning, and winning.
But especially the supply chain. We think supply chain issues moderate in the first half of this year. As we go into first half 22, that moderates. I think that could add another 5 to 10% to the stock.
Rivian continues to make headlines, and I would say not exactly too great. A couple weeks ago on earnings day, said they're delaying trucks. Came out today saying they're delaying a certain version of another truck. Do you think Rivian is just overvalued at these current levels? It's going to have to go down the same production and manufacturing issues as Tesla did.
Fair point. And not only that, but they don't have Elon Musk at the helm. They don't have Tesla's engineers. They don't have years of production experience prior to trying to ramp up their R1T, their pickup truck. They're also trying to juggle 620 different thousand projects. Slight exaggeration there, but you guys understand, right? They're also making the delivery vans. They're also thinking about the SUV. It's not just a single product they're laser focused on at this point in time. I do wish them well. In fact, let me wish them well. Good f***ing luck.
Look, they're being viewed as the golden child of EVs coming out of the gate. And with that type of valuation, any shortfall, any misexecution is going to really get hit in terms of the stock.
Well said by Dan Ives. Rivian stock is priced to perfection. In fact, I would go a step further and say it's priced beyond perfection. The market is assuming that Rivian is going to execute flawlessly, and I mean flawlessly, for the next 5 to 10 years. If I were a betting man, I wouldn't be betting on that outcome. But hey, you never know.
I think Rivian is really a category changer in terms of where this goes over the next 3, 4, 5 years. But to your point, they need to execute flawlessly. And that's really going to be the focus going forward for the stock to continue to move higher. We think they're one of the core winners. The battery push out, I'm not too concerned about, but they need to make sure that they continue, despite the chip shortage, hit and exceed street expectations in terms of deliveries and production.
I want to go back to Tesla for a second and a graphic we were showing a few minutes ago that shows the annual performance of Tesla, and that it's just been year after year after year of the stock going up on an annual basis.
Something caught my eye here. The numbers that Yahoo put on screen, Tesla's stock performance over the last decade since IPO, make no fucking sense. I don't know where these numbers have come from, what the methodology is here, but in terms of percentage returns, what Tesla stock opened the year at versus ended the year at, none of these numbers are right. Maybe they're using the average stock price over the year, I don't know. Given the label Tesla's annual growth, you would assume it's talking about how much the stock grew or didn't grow in the full year, right? Obviously not. So Yahoo, come on guys, step up your game. I know people make mistakes, but what the fuck are these numbers?
I just struggle with it's not consistency because the magnitude of the gains have been all over the place here. But just the idea that Tesla is just going to continue to be this dominant, I sort of struggle with here.
I can relate. I too struggle to know how could Google remain so dominant in search? Amazon in e-commerce, YouTube in long format video. I just struggle to understand how such a thing would be possible when you begin with an unassailable lead and that lead grows at an exponential rate, how you could remain in a dominant position. Does anyone have any ideas? Help a brother out. Let me know below.
Yeah, I think it's a great point, but I don't view that they have to continue to have 80, 90% market share. I mean, my view is it's a $5 trillion green tidal wave over the next decade. Even if share starts to recede a bit, I mean, we're talking about the biggest transformation to the auto industry since 1950s. And I've never viewed Tesla as an automobile company. I view them as a disruptive technology player. But that's also why competition's coming from all angles. They got a target on their back. Any issues are going to be greatly exaggerated. But it all comes down to if demand continues to accelerate like we've seen globally, capacity gets added in Berlin and Austin, they could be at 2 million vehicles from a capacity perspective. And that's why they have a massive opportunity in terms of what we're seeing from a customer adoption perspective.
Dan, who is the biggest threat to Tesla's dominance? Is it Ford? Is it General Motors? Is it Volkswagen? Is it another name that we're not even talking about?
Yeah, it's the 313 area code. I view it as it's Ford or GM.
Come on, Dan, seriously? GM? I get the Ford argument. Jim Farley's done a pretty good job. The Mach-E, relatively decent car. They're probably losing money on it, but hey, it's a good start and they're finally starting to turn around. They're saying the right things. They're giving Elon Musk public credit for leading the way, saying that they can learn from Elon. The Ford CEO, Jim Farley, even saying on Twitter that he'd be open to a discussion with Munro and Associates, shout out to Sandy Munro, because he'd learn a few things. But uttering genuine morons, Government Motors, GM in the same sentence as Ford as potential competition. What an absolute joke. I'm going to put an image of the General Motors CEO on screen right now. Mary B.S. Barra, a fucking potato. In fact, that's insulting to potatoes. She is worse than incompetent. This is the same clown who oversaw the company when they made a deal with an obvious scam of a company, in my opinion, do your own research, Nikola Motor Corporation, for a fake truck to lure in unsuspecting retail investors to pump the stock, which has absolutely nothing whatsoever to do with the $125 million fine that the company is now going to be paying to the Securities and Exchange Commission for fraud. This is the same CEO who's conspiring with the corrupt president of the United States to steal Tesla's valor and claiming to be the leader in the electric vehicle space. This is also the same potato who was CEO of the company when they announced the deal with Fordstown Motors. Mary Barra is not fit to lead General Motors as they transition to EVs. The captain of the Titanic is currently accelerating directly towards an iceberg and doesn't even realise it. GM are unequivocally f***ed. It's too late now. These morons claim that by 2035 they're aiming to be producing nothing but electric vehicles. Maybe Dan thinks in 2035 there'll still be consumers buying internal combustion engine vehicles. I'm afraid not. It's too late for a new captain now. GM are f***ed. Let's move on.
Because from a distribution, from a stalwart potential, you're talking about GM sells 7 million cars, per year. You start to convert a significant amount of them. But I think it's really Ford. I think what Farley's finally had the golden touch at Ford. You see what's happened on the F-150. You look at the re-rating in the stock. It's really the stalwarts that are going to be, over time, more of the threat in the EV landscape rather than what I view as the pure plays. Even when you look at a Lucid, a Rivian, for them to get to scale, it's going to take 5-6 years. Ford, GM, and I'd say VW in Europe continues to really be probably the biggest, I wouldn't even just say threat, I'd say probably the biggest opportunity as they all dive into the deep end of the EV pool.
Dan, just to take a bigger view here, if we go out to 2030, for example, what percentage of the cars on the road are going to be electric vehicles? And at that point, it seems like there's maybe a lot of winners to pick from.
Well, Julie, that sort of summarizes really our point. What's been our bull thesis on Tesla over the last decade is we think it's 25 to 30% by the end of the decade that are EVs.
I don't even know what to say here. Dan, if you're listening, if somebody from Wedbush is listening, can you guys stop saying that out loud? Because I'm going to clip that. In fact, everyone watching, some of you I know will do it. So set a reminder to check back in early 2031 at what percent of the new vehicle market in 2030 was electric. Oh, fuck me. 25 to 30%. Let me ask you a question. When the purchase price of electric vehicles reaches parity with internal combustion engine vehicles, e.g. same range, performance, etc., or better for the same price, which is only 1 or 2 years away, and we already know that the cost of ownership is much lower for electric vehicles due to far fewer moving parts, blah, 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 who is it that will still be buying ICE vehicles? And the answer is dumb people. Now, unless Dan Ives and Wedbush assume that 70-75% of the world's population are really fucking dumb, and don't get me wrong, there are plenty of morons out there, but I'm not sure there's that many. I don't think there's going to be that many consumers opting to purchase an inferior, more expensive product. It's as if this mob is assuming linear growth, linear adoption of electric vehicles. I just really find it hard at this point in time to hear people saying these absurd things out loud because the internet never forgets and these estimates are just not going to age well. I would recommend looking to history, looking at the adoption of other innovative, disruptive technologies. Smartphones, high-definition televisions, the internet, blah, 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 blah. There's many, many examples. We don't see incremental increases in adoption rates over time. There reaches a tipping point and suddenly we have an exponential increase in adoption, an S-curve.
We think it's 25 to 30% by the end of the decade that are EVs. Tesla continues to sort of own that market, but you look at this transformation, you go from 3% of automobiles to 10% by 2025, by 2030. That's why I call it, when you look what's going on, and there's just a broader view across tech, across disruptive tech, it's a fourth industrial revolution playing out. And I think with a lot of these hyper-growth names, when you look at valuation just over the next year or two, you would have missed the Amazons and Netflix, the Teslas, the Apples, and others. And I think many of them have been haters on Tesla. I think if they were NFL scouts, they would have been super negative on Tom Brady in the 2000 draft, probably still negative today.
Dan, you're You're like the Tesla analyst out there on Wall Street. Just from a personal perspective, what has it been like covering this company this year?
I think it's been a fascinating year because there's the circus show that we always have with Musk, from the Twitter poll to what we see, across social media. You have the China issues. That was some dark days earlier this year. Would have been very easy, I think, for many to throw in the white towel.
I definitely agree with Dan on this point. It is never boring being a Tesla stock investor.
But look, this is always going to be an emotional bull bear story in terms of Tesla. And, I think it's one where I think maybe that's even more divided today in terms of the valuation. But I continue to stress, that's why Ford's trading where it is. It's why you've seen more of the re-rating in GM. And it's why you're starting to see Rivian and some of these others come out, because investors have that strong appetite for this. But look, I love, on Tesla, I love hearing from the lovers and the haters. It always makes it enjoyable covering it.
Ives is such a mixed bag. He's very bullish on Tesla stock, at least over the short term. $1,400 base case for Tesla stock next year, $1,800 bull case. But over the long term, the thesis around EV adoption, holy fucking shit, dude. And then of course, there's a suggestion that GM stand a chance, let alone that they're legitimate competition for Tesla. I just can't figure this guy out. See you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.